bad news for Canadians who are planning to get a mortgage. A new mortgage cap is coming soon. This has been just announced by OSFA, which is a bank regulator. Now you would say, how does it affect me as a Canadian? The bank regulators news. Well, they regulate banks, and that means they regulate mortgages. It is basically an office of the superintendent of financial institutions. And now you're going to need to show 4.5 times your income in order to qualify. Guys, let me explain to you how it works, who it's going to affect, and why I think it could be a bad news. It might be a good news. Let me know in the comments down below what you think for some people. But honestly, I just want to be bluntly honest with you guys. The fact is that a lot of people don't understand is that everything is done for the banking system, for the banks, and not for the consumers. Consumers are you and me. We are the people who take mortgages. We are the people who uses products of the banks. And really, my opinion is they just don't give a damn about us, okay? So let me explain to you. Guys, first of all, we have this cap right now for mortgages, right? 2%. So whatever is prime rate right now is the banks plus 2%. If you qualify, now it's going to be 4.5 times your income. Now guys, a lot of you are going to start commenting, those of you who heard about the news are going to say it's good, it's going to make housing more affordable. A lot of people who are saying those things, they haven't been in on the real estate market as landlords for a while. Let me explain to you guys. Let me explain to you as someone who buys houses for people on a daily basis. Let me explain to you as someone who is married to a mortgage broker. I'm Realtor with XP Realty. My wife is a mortgage broker with Realtors Mortgage. Contacts will be in the description of this video. But anyways, let me explain to you guys what this really means. And it's probably okay for Alberta, but it's terrible news for Vancouver and probably Ontario. Guys, so what they are doing is, it's not going to affect everyone, okay? It's going to go only for those who have an uninsured mortgage, which means is that you're putting more than 20% down. Okay, guys? What is the... now, I want to also say that the amount of uninsured mortgages is growing and the amount of insured mortgages is going down because we are getting in this insanely unaffordable market. And terrible news for a lot of people in Toronto and Ontario is that you might be stuck with your bank forever. You might be locked into owning your property for a very long time. It is a terrible news for some people. A lot of people will be just stuck. You know what happens is that when your renewal comes as a consumer, right, as a person who has a mortgage, you go around and you naturally shop around. You see who gives you the better rate. But now you are basically a pawn. You're taking advantage of. You're a slave of that bank, and you cannot get out unless you sell your house and then go back to rent. But essentially, in some cases, some category of Canadians are going to be stuck with that particular bank and won't be able to get out because, and the bank is going to tell you what your rate is. They can charge you more because they know you don't have anywhere else to go with this thing. Okay, let me explain to you guys. Oh my goodness, it is basically, guys, for uninsured mortgages, right? And let's look at Toronto. What can you buy below $1 million? Okay, not much. So you need to have at least 20% down payment, right? And what is Toronto incomes, people? A lot of people, guys, I'm going to leave Toronto to Toronto. I'm going to stay away from that shady market out there for mortgages, especially Brampton as an area, like has a reputation all over Canada. People have more than $1 million mortgages and an $80,000 income. And somehow, I don't know how people pay for that. But anyways, I don't know how they got it. I don't know any of those details. But the fact is that what they're going to be, this is actually meant to target investors, but I think it could target even regular people. So you are, let's say those people purchased an uninsured mortgage, and now they're going to be looking at your total debt. Guys, let me know if I'm wrong in any of the calculations. I want to read your comments, guys. I want to see the arguments, like say what you think, comment down below. Bring your friends into discussion. I want to see, guys. I'm not all-knowing person. I'm just announcing what I know from what is happening right now around Canada. But there are things that you can bring up to my attention that I might have not covered in this video. Let me know. So let's say what it is intended to do. It is intended for those people who have cottages, for those people who have multiple investment properties, for those people who are like investing into real estate. Now, mind you, it's not targeting corporations like huge investors. It's not targeting commercial mortgages. So what is commercial mortgage? Well, when you're buying more than 4 units. So if somebody comes and buys your entire apartment building and becomes your landlord, a big company, it doesn't affect them. It affects, for example, me. If I am buying a property and I have my primary residence, then I'm like, okay, my income went down, you have something paid off, you buy another one, and you kept your previous property on rent. Now, when it comes to refinance, now I want to tell you guys, so for example, in that case, when it comes to refinance, they're going to assess your total amount of debt based on your income. So if you have more, how it will be calculated. Let's say your income is $200,000, right? So $100,000. Let's do 100, easier to calculate. Your total debt should be not more than $450,000. 4 times 5, that annual income of qualifying income, right? So if you cross that mark and your debt is higher than that, you cannot get a different mortgage. So you won't be able to buy it, but if you already have a property, you're going to be stuck with that lender, and whatever lender is going to give you the rate, you'll be stuck paying that rate what the lender wants you, because you cannot go anywhere. So essentially, guys, this is what it is meant. So basically, Canadian government is probably thinking in this way. I might be wrong, but let's screw up landlords. Let's go against one category of Canadians who have a little, who is not fully broke, and make them broke just like everybody else, and justify the actions by going against a certain group of Canadians who, let's say, have multiple properties. Let's say they saved up money, they purchased a cottage, they purchased a house, and it's just targeting that kind of middle class Canadians. I think every Canadian should have a house, guys. Guys, remember the times. Let me know when it comes down below if you've been long enough and old enough to be at that time buying properties in, let's say, 2006. You remember where you could buy a property before the changes were happening, so you could buy with 0 down payment. You could even get a cash back from your bank where you were qualified, not based on your debt, not your total debt, but based on your credit history and your income, and it doesn't matter. So they made it, because of the financial crisis in the United States, they fixed it. They made mortgages and debts more secure. Guys, I want to say that it's all made to protect banks' assets. Forget about thinking that it's made for you to make housing more affordable for you. Now, guys, what really is going to happen is, for example, with this regulation, if you're living in Toronto and your income is low, but the property that you want to buy is high, and you have to go on an insured mortgage, you cannot buy it anymore. Some of you would think that, hey, maybe it's going to bring down the prices. Maybe, we'll see, but in reality, it's going to create a scarcity of inventory. Because look, if you have already purchased a house and your income, your total debt, you don't have that 4 times your income is not that high, what you're going to do is, you're not going to sell it. So it doesn't really help to increase the amount of houses, because why would you sell if you cannot buy anything afterwards? It's just going to screw up a lot of Canadians. That's all it's going to do. It's going to make a bank's asset and bank's investments, because the mortgages are investments of the bank. So it's like they can take money against those mortgages, because you are supposed to, let's say, we are supposed to pay it. So for them, it's assets. For us, it's liabilities, and it's made to protect the bank's asset. So yeah, I honestly, guys, think it's a terrible idea, because it's going to be for the benefit of the bank's investments, but not for the benefits of consumers. And if you are just a regular Canadian who wants to save up money, I don't know how, but you worked so many jobs, did so much of overtime, you saved up 20% down payment, because the properties on your market in Toronto or Vancouver are more than $1 million that you want, you have to go on an insured mortgage, but your income doesn't allow that, because it's uninsured mortgage, then you, I don't know what to say, guys. And also, you would probably be forced to go for an insured mortgage. So you would be forced to get an insurance provider. So you'd be forced to pay that premium, even if you can afford. Like if you have a down payment, you're okay to put 20% down payment, but now its threshold is 4.5 times your income. In a different market, let's say not Toronto or Vancouver, and let's say you're somewhere else, but the property value is, let's say, $400,000, but you want to put $100,000 because you don't want to be paying, right? You don't want to be paying extra interest. You don't want to be paying those premiums for the insurance to protect them from the bank. But let's say your income is less, and now you're forced to take that insurance because you're not going to qualify to buy that property with your income. So, guys, I'm just saying it's all black and white, and I feel it's good for the banks, but we are the ones who are probably going to be screwed by these things, and people who are going to be stuck with the banks, as I said, like slaves, because all of a sudden your mortgage is uninsured, and you got it where the interest rates were less, and everything is fine, and now refinance comes, the bank is like, well, I'm going to swap you with a couple of more % interest rate. Why? Because I can. Why? Because you get nowhere else to go. Why? Because regulator has changed the rules. And I'm sorry, nothing personal, it's all business. And does it going to make people sell the properties? Most likely not. What do you guys think about it? And is it a good news that in upcoming future they are planning to do this? Will this make housing more affordable? And do you think it's a good thing? Do you think it's constitutional to go against a certain group of Canadians? I mean, I think everyone in Canada should be able to afford a house, and the real solution for that is, not slamming immigrants. Like what they're doing is they're slamming immigration, international students. Okay, slam the immigration. Why are you slamming people who are coming with education and money into this country? But they slammed international students, foreign workers. Okay, maybe it's justifiable. Maybe we overdid it in the last couple of years. I might agree on that. But then they're like, okay, let's go after Canadians who have a cottage home. Let's go after Canadians who have a little bit more money than the tenant is, who were able to get this huge debt, liability on themselves. Let's just make it in such a way that they're forced to sell. And if we take a house from somebody else and give it to another person, maybe that's going to justify it. Guys, the real solution, in my opinion, is it's 3 words: build more homes. And that's it. That's build more homes, which I guess is the last resort. See you guys in the next video. Let me know what you think. Bye for now.